Hey everyone, I want to go over why the VIX is actually scamming you. So let's pull up the spot VIX, ticker VIX, on our option chain. Now let's say, hey, the VIX is sub 20. I want to hedge, buy some VIX calls for my portfolio. How do I do it? What do I do? Well, if we go to the VIX, you'll see with the VIX at 1916, the out the money options are paying or at a hefty premium, to say the least. So, for example, let's say I buy the 30 strike calls at, let's just say, mid-market at 80 cents. My break-even will be 30 plus 80 is 30.80. That would be my break-even. So, pretty big rally from where the VIX is at. If I buy, let's say, the September monthly 20 calls, I'm paying about 175 mid-market. My break-even is 20 plus 175, 2175. But let's say I want to buy an in the money call. Remember, in the money, higher probability of working out. You're going to pay more. Let's say I want to buy the, let's just say the 15 strike calls that are in the money. You can see I can buy them. They're about, let's just say 330. I try to get filled there at 330. My break even is 1830. The stock VIX is 1913. How can that be? How can the in the money calls be cheaper? Maybe I want to buy the 10 strike calls at $8. So 10 plus 8 equals 18 is my break even. Why isn't there more premium on these? For example, let's say I trade NVIDIA stock and I want to buy in the money calls. Maybe I want to buy these September 100 calls. They're at 1520. So what is my break even going to be on this trade? On NVIDIA, 100 plus 1515, that is 115.15. The stock is 109. That makes sense. You see how they're more expensive from where the stock is trading. If I want to buy the 110 calls for September, they're $9. My break even is going to be 119. If I want to buy the 195 calls, 18. So you see how they're still on these options. They're still juice, as I like to call them. They're still worth something. But why on the VIX? Well, what you have to figure on the VIX is the VIX is a naturally decaying asset. So meaning, if the market goes up, if the market stays flat, heck, even if the market goes down slightly, the VIX will naturally decline. So when you look at the price of these options in the VIX, it's accounting for, even if we get a pop in the VIX, so you're right on the calls that you bought, it's already accounting for that natural decline in the VIX. And also, too, if you look at the VIX futures, they used to be monthly expiration, and they're pretty a big boy contract. Each point, I believe, is $1,000. Now we have weekly VIX futures. So you could see the VIX futures, the further out you go, there's more premium on them, which would make sense, right? More time, more premium. But these VIX futures now, every single week, there's a new contract on them. They used to be only monthly, but now you can see, 2 days, 9 days, 16 days. So let's say you buy the VIX futures, naturally, it is going to decay because it always has to roll forward on that next contract. So you can see all the volume is in the ones that expire in 9 days, and then that will roll over after those 9 days of expiration. That's why if you trade, let's say, a VXX or UVXY product, they're down so much more, like UVXY, which is the leverage VIX instrument, about 9% today, while only spot VIX is down about 6% today, because they're having to continuously roll that contract. And it's the same with the Bitcoin, the BITO, which is the Bitcoin fraud ETF, not really a fraud, but you're going to pay for that cost of naturally always having to roll the contract. So you can see it's down today more than the Bitcoin futures because it does take into consideration that cost to roll the contract. So let me know what you think, how you are hedging your book in this portfolio. In my opinion, the best way to do it, if you can't time the VIX perfectly, is always just buy puts on the indexes. That's going to give you usually your best bang for your buck. Or my little favorite instrument to trade is SQQQ for the Nasdaq. There we go. And you can see, I don't know what this tick is on it today, but you can see it's just a cleaner product in my opinion, and obviously very cheap, around $9.50.